up until 2017. So probably for the first 8 or 9 years, I think I got to about 35 million, right under 35 million, it's like 32 or 33 million in new originations in the year. And I was like, all right, I can't do this by myself.
Yeah, too much.
Not enough hours in a day.
Not enough. I mean, it was crazy. I mean, it was nonstop. And
you were officially grinding at 32 million.
Yeah.
That's more than grinding.
Right. That's an understatement.
Yeah, exactly.
Welcome to the podcast dedicated to real estate, insurance, and everything in between. Join us as we take you along our own brokerage building journeys with additional wisdom from our network of business experts. Welcome to Bricks and Risk. Hey everyone, welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
And today, Sean, we have an awesome guest on today. We have Jared Pontz, who is president and managing partner of Direct Mortgage Loan Company and Pontz Properties. How you doing today, Jared?
Hey guys, thanks for having me.
Absolutely. Thanks for joining us. So a little background on Jared. On top of being the president as well as the managing partner of those two companies, his combined expertise in real estate investment, property management, and private lending inform his unique perspective on Philadelphia real estate. Pontz Properties is a multifaceted real estate firm currently managing over 600 rental units in Northwest Philadelphia, and its subsidiary operation, Direct Mortgage Loan Company, is a private lending company specializing in short-term fixed-rate financing. DMLC finances real estate investors and developers throughout the Philadelphia and the surrounding area. So a little bit about Jared, born and raised in Philadelphia. He's rocking an MBA from Temple University, served in the U.S. Peace Corps. He's an active real estate investor. He serves on the Mount Airy Business Improvement District and has been recognized as one of the most influential financial professionals by the Philadelphia Inquirer, which is awesome, man. So first question, I know that you're an active investor, but you started out in the Peace Corps, as I just mentioned. So tell us a little bit about how you got into real estate investment and development and how that helped you become the president of the companies that you are today.
Well, for starters, thanks for the intro. Makes me sound very fancy, but not so fancy in real life.
We're formal guys here, Jared. We're formal.
We are, extremely. If you can't tell by how we're dressed.
Yeah, me too. Just put on a t-shirt for you. So, I mean, to answer your question, that's right. I went into the Peace Corps after college. I got to undergrad at University of Delaware. And I had about a year to kill between college and the Peace Corps. I was assigned, they gave me a date. I had a lot of time. And I got an internship with my now business partner. So I was basically interning for Bob Elfan. Wow. I did a 9-month internship for him and basically sat across his desk, listened to his phone calls, and kind of got myself on the ground floor, on the property management business, on what was a very small management company at that time, and on a sort of a private lending business, which was Direct Mortgage Loan Company at the time, had a few $1 million in receivables. Maybe, I don't know exactly how many loans, but a fraction of what we do today. And I just sort of, started listening, paying attention, spent 9 months with that, went off to the Peace Corps like I had planned. Bob and I stayed in touch. And towards the end of my almost 2.5 years in the Peace Corps, Bob basically said, come back and, asset manage for me and figure out your life. And I was sort of debating whether or not to continue working in aid agencies across, overseas or coming back and what to do with my life. And Bob and I had a good rapport. So I decided to come back and I asset managed for him. And about a year into that, decided that I wanted to go back and get my MBA. And I said, this was great experience, Bob. I love you. I appreciate the mentorship, but, I think I want to sort of get out of the mom and pop business and go into the big bad corporate world. Grass is always greener.
Yep.
Sort of mentality. I was young at the time, didn't know any better. And Bob basically convinced me that the grass was greener where I was sitting, and that I had lots of opportunities if I was interested in them. And one thing led to another. And, over the course of about a 10 or 12-month period of time, he convinced me to, I ended up going back and doing night school at Temple University to get my MBA. Bob and I formed what was a very minority partnership for me over that period of time. And so I sort of went from being his, asset manager / property manager to business partner on a very small scale. And then over at this point, it's been about 19 years now we've been together, and partners for about 15 of those. And over that 15-year period, that partnership's gone from, 5% to now we're equal partners, and the name of the company's changed. And, I've been running the day-to-day operations now for 5 or 6 years exclusively, but probably even longer than that at some level or another. And, he basically said, hey, I basically said to him, I want to develop our mortgage company. There's some opportunities here. And he said, let's do it. I'll support you, but you got to do the heavy lifting. And that's sort of what's happened.
Did he ever share with you, Jared? I'm curious. Did he ever share what it was about Jared that kind of made him want to make those?
Yeah. You must have impressed the hell out of him at your internship.
I'm thinking a young kid, right? When you guys, when you were doing your internship.
So I was 28 when he made me partner. Brought me in as his partner. And I think, I don't want to put words in his mouth, but over the years, we've had lots of conversations where this sort of thing has come up. And I think there's a few things. For starters, he saw a lot of himself in me. A lot of people are like this, so I'm not saying this this is unique to me, but in my specific case, in my relationship with him, I was a grinder. I got my MBA, but I was the kid in the MBA, getting my MBA that was not in it. I just wasn't vibing with the academic piece.
Yep.
Everybody was there, sort of knew what their career track was going to be. And I sort of had the real world experience, and I couldn't do any PowerPoints and I couldn't do Excel spreadsheets, but I could think my way through real life. And so, he sort of saw a grinder, he saw a hard worker, somebody that was tenacious in negotiations, wasn't going to take no for an answer 3, 4, 5 times in a row, was ultimately going to get to a yes or an alternative solution. And I think he just saw a lot of qualities in me that he sort of saw in himself. And I wasn't, I like to say to my team, I'm a grinder and I want you guys to be grinders.
Yeah.
And I'm a communicator. I want you guys to be good communicators. And so I think he saw some of those in me, and one thing led to another, like I said a minute ago.
That's awesome. So, all right. So you go to Temple, you go get your MBA. Did you have a focus on your MBA? Was there a specific part of the MBA you were interested in? Did you just get more of a general degree?
I'm not sure. Good question.
Let me take a look at that picture on the wall.
Yeah.
Okay.
That's right. What's my degree say over there? No, it was a general. I mean, it was generalist. I took finance classes, I took econ classes, I took marketing classes, I took all statistics, I took all the normal stuff. I don't think there was any particular focus there. It took me about 3.5, 4 years to get through it. I did it on nights and weekends. My wife was a saint, and we had a young baby towards the end of it.
Oh man!
So it was hard, but it was worth it. Not necessarily because I learned how to do math better than somebody else. It gave me confidence to know that I could hang with people wearing suits all day long, and I don't. And so it just gave me that confidence about myself that I belonged, and I could. I think I already knew I did based on where I was at that point in my career, but it really just kind of elevated my mental outlook on who I was, and for that, it was worth every penny and all the time and effort.
Awesome.
Can you talk about the private lending? Because a lot of times, we think about buying and mortgages and how they're kind of attached at the hip with a mortgage company or a bank, and kind of talk to us about how that's different with you guys and what types of buyers you're working with on a daily basis.
Yeah, sure. So Direct Mortgage Loan Company, which is our private lending wing, we specialize in short-term bridge financing to real estate investors, developers, small business owners. We're lending money. It's a commodity business. There's a lot of people out there. There's banks, there's private lenders, there's private individuals, there's REITs, there's hedge funds, and whatever. There's lots of different groups out there lending money. So, we're always trying to find ways to sort of differentiate ourselves. We're working with small to mid-size investors and developers who are sensitive to cost because there's small margins in the deals they're doing. We're more expensive than a bank, but we provide a lot of speed and a lot of ease in the overall process that they can't get from anybody else. They can get it, from the small mom and pop accountant, lawyer, doctor who's lending a few bucks, but they have limitations. They don't really know their way around the block. They ask a lot of questions. They may not be quick. And there's a whole myriad of reasons why that may or may not work for somebody. There's other private lenders who could be really big or not have the same sort of organization or setup that we have. There's banks that have the bureaucracy of a bank that we all know about. And so we really provide to streamline the process. We really work hard, communication, over communicate, fast response on emails, fast responses on text, fast responses in calls. You get an email on a Friday, make sure you're getting back to them before your day's over. If you're getting an email over the weekend, look at it. If it can wait till Monday, it can wait till Monday. But if somebody's time sensitive, let's get them a quick response. It takes 30 seconds to type out an email.
Well, I think too a lot of these real estate investors, it's the deal hinges on getting that
time
information quickly, right?
Yep.
Right.
And so
that's right.
I guess a very unique niche with the investors that you deal with. And if you're able to provide that service, it's like, here, I'm going to give you a win. And then you're going to get the deal, and then another win, and then another win, and over and over and over. So I guess a lot of yours are probably repeat clients.
Huge percentage is repeat, like 65% of our loans last year were repeat clients. So it's a big percentage, but it's not just speed and like that email exchange before. It's really, it has to carry through the entire transaction. It has to be in the lead prospecting. It has to be on the application. It has to be on the loan closing and the conveyancing. It has to be on the draw process.
Yeah,
it has to be
after
on
the fact.
After the fact, it has to be through the servicing when someone asks for a payoff or some sort of question during the servicing process, or on the tail end where they come back to you for a follow-up deal, a follow-up transaction. You have to be sharp and you have to be fast all the way through that process because the borrower needs it. And even if they don't know they need it, they need it. The difference between being quick and efficient in your communications, interactions between lender and borrower, it truly translates to time and money. And it's not necessarily something you can see in an Excel spreadsheet. I say this all the time to people when we're sort of lead prospecting them. I say everything we do is not going to translate into that Excel that you're trying to figure out, does Jared and Direct Mortgage make sense or does this lender make sense?
Yeah.
If you look at it on Excel, we're not going to be the cheapest. We don't sell ourselves the cheapest. That's not our competitive advantage. But if you plug it in the Excel, it's going to be pretty close. And then if you're able to look outside the box and look at all the other advantages that we offer, or we think we offer over our competitors or our non-competitor bank lenders out there, or whatever the other lenders may be, if you're able to sort of quantify those in some form or fashion, and then just do one, and you'll see the value. It's almost so compelling. You will wonder not everybody, but a lot of people, you almost wonder, why was I questioning this to begin with?
Yeah.
It's really there's just so much value. Look, I'm an investor myself. I own a bunch of properties, and I know that when I'm dealing with a lender, and I'm dealing mostly with banks, traditional lenders, but when I'm dealing with lenders, I know that the easier they make it for me, the happier I am.
Oh, yeah.
I'm willing to pay, a 0.5% fee instead of a 0.25% fee, or a 1% fee instead of a 0.5% fee, to sort of have that ease. I want the person who's going to respond to me quickly, who's going to, not be a pain in the butt when I have a question mid deal. I don't want to be a thorn in their side. I want to be a friendly relationship. So
what I find so cool about this whole thing. So for like the audience out there, people listening to this, they're trying to get tips, tricks, hacks. They're learning things about business. Maybe they're new to the industry. Maybe they've been in the business for decades like us. But even though you're like a private lender, that's how we classify you. I was in the mortgage business for a little bit. I mean, you guys more or less started a bank. So you said like, okay, we need a capital source that we can lend on at certain rates with certain fees with a staff in place. Like, how do you even start that? So I know that you focus on like small to mid-size, because again, small to mid-size, let's be honest, especially in our market in Philadelphia, we don't always get access to the big lenders or the big banks. So they're like, you're not proven, like you haven't been around long enough, the deal's not big enough, you're too much risk. So like, how do you start, let's call it in air quotes, how do you start a bank to start lending to people who do that?
Right. So the difference between us and a bank, I mean, there's lots of difference between us and a bank, but banks take deposits and have other ancillary, wealth management, they provide CDs, money markets, all that sort of stuff. We don't do any of that. We're strictly a lender. But the lending piece of it, you're right. I mean, it sort of is like a bank in that way. And I was fortunate that my partner, Bob Elfant, his father started Direct Mortgage Company 60 years ago.
Wow.
And was basically lending to, 100,000, 30,000, 25,000 to friends and family and a business colleague here or there, very small. Bob got into the business after he graduated from college and sort of he got into the taxi cab medallion business and was lending money for that and was doing some small real estate transactions. When I got into the business, the portfolio was like $3 or $4 million. We have like 80 million right now, just to give you a sign, some context. Yeah. And so I got in it and I was starting to help him put deals together. And I was like, Bob, there's huge opportunity here. The city's made of row houses. It's like never ending. Let's try to focus and grow this sort of thing. And so we sort of slowly built, we worked with what was then Valley Green Bank, and we slowly built our, even before that, we were at Roxborough Manioc Bank and
no way.
Citizens Bank and it was East Falls Bank, I think, was one of the banks. So we bounced around with little lines of credit from different banks to help fund it. We put our own capital in. We raised a little bit of money, and we've slowly grown that out. And it's been a lot of work, to be honest with you, as it should be, right? If it was easy, anybody would do it. Mm-hmm. But we built out our capital stack, to use a fancy term, just like we built everything else out, kind of a slow grind. We don't have aspirations in necessarily, having $500 million in loans and lending in 17 states. Right. And, it's private lending. I want to be able to see the real estate, touch the real estate. We've got a really great team. We've got, several loan officers, operations manager, back office team, finance, kind of a back office accounting team. We've got a really good group together, and we want to keep it so that we know the deals, we know the neighborhoods, we know the areas, and that's, it all ties in. Sort of, there's no reason to go out there and sort of bring in a private equity partner to give you $100 million if you don't want $100 million.
Yeah, that's a really good way to put it.
Do you guys underwrite the deals yourself? Like, I'm thinking of this scenario where someone comes in.
Wait, you looking to do a row home?
No, not yet. Maybe
something I don't know, bro.
Maybe a little bit. But no, I'm thinking of like the scenario that like a person brings you a deal and says, "Oh, I want $200,000 for this rehab project that we're working on." Who's looking at the property to say, "Oh yeah, this one's not going to work.
$200K may be a little rich."
Yeah, like are you guys doing that directly, or does it go into someone else to look at that, or how do you kind of judge the deal or weigh the deal to make sure that it's appropriate and
assess the risk?
Yeah, well, great question. For starters, just to touch on one thing you just said, we're not just doing flips and row homes. So that's one piece, a big piece. But we're doing land, we do land entitlement, we do multifamily, we do new construction, a lot of single families, but warehouses, industrial.
Oh, wow.
You sort of name this scenario or the property type, and we've either done it, we're doing it, or we would do it. I mean, we're fair game to lots and lots of scenarios. But back to your question, we do it all. Yeah. For the longest time, I was doing it.
Wow.
I'd say for up until 2000 17. So probably for the first 8 or 9 years, I think I got to about 35 million, right under 35 million, it's like 32 or 33 million in new originations in the year. And I was like, all right, I can't do this by myself.
That's too much.
Not enough hours in a day.
Not enough. I mean, it was crazy. I mean, it was nonstop. And
you were officially grinding at 32 million.
Yeah.
That's more than grinding.
Right. That's an understatement.
Yeah, exactly. And so we started building out the team. We're like, all right, this is crazy. And so we added some back office. We added another loan officer, and then another loan officer, a marketing person, an operations manager, a closer, whatever. We had to build it out. And I think at our biggest year, we did 70 million in new originations. I think it was last year. Not 23, but 22. 22 is a little slower because of the market, but still, I think we did almost 65 million last year. So we do a nice amount of originations at this point, but we're doing it all. Somebody comes in, whether it's through a referral, through a website lead, through a phone call, through our own prospecting. And we built out through Salesforce, a pretty cool system. Nice. Molly at our office has really worked closely with me and helped us come up with sort of how we like to do it, how we visualize it. And we build out the system to work so that it just flows right through. And we have collateral maps, and we have all sorts of unique kind of ways that we're analyzing things the way I want to see it, not the way a bank wants to see it. Yeah. But it's kind of literally, it's like, hey, Molly, can we do this? Let me try. And we do it. And then a week later, I'm like, hey, what about this? What about that? What about this? And we just, over the last 6 or 7 years, just kind of keeps going and going and going. And it allows us, thank goodness for it, because we would never have got through COVID had we not implemented it. But it allows us to do everything from anywhere. Yep. And between our access to the MLS, our knowledge of the real estate market, our access, my business partner Bob Elfman owns Elfman Wisicki Realtors. Shout out to Elfman Wisicki Realtors. I know they're competitors of your guys, but we have access to a lot of realtors there for questions. And so we can sometimes reach out to a realtor we know works in one market or another market and say, we're looking at this deal. This is what we're coming up with. What do you guys think? And some deals that we just can't figure it out, we'll go and get a third party appraisal and or on deals over 500,000, we require third party appraisals across the board. Now, one of our benefits or unique advantages that on deals under $500,000, we don't require third party appraisals on probably 99% of those. We're sort of doing it all ourselves. And I'm a one-man loan committee. I say that with a smile because I'm not really, there's a team of us working together, but it all funnels up to me. So, at this point, the loan officers are gathering information, having initial conversations, kind of doing the sales pitch, giving all the information, putting the deals together. And then I meet with every single borrower before we do a final approval. Everybody across the board, doesn't matter who it is, the first time. And then we approve them. We got the deal. We analyze the deal. And that kind of goes through on repeat situations. The deals are all being put together, all the information, comps, analysis, deal write-ups, the whole 9 yards, and sort of being presented to me in an organized way. Between me and Molly, I'm doing the final approval, but Molly's kind of my right hand on that sort of stuff. And she's great and has an amazing feel for it. And, we have kind of a 5-person team putting the deals together.
Wow. Hey, everyone. This is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth. So if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. One thing I find interesting about what you kind of just went over, Jared, and that was such a really good question, Sean, is that you got to a point. So you're like, okay, 2017, not enough hours in the day. You almost like hit a wall and you're like, I don't even think I could service any more business, even if I tried. So then you got to the point you're like, hey, I'm working too much in the business and now I need to be working more on the business. And this is something we talk about a lot because we've had to do that as well. It's like Sean started his company from scratch by himself, no partners. I started Copper Hill Real Estate with 2 partners. So again, I had 2 more people to bounce things off of. But no matter which way you look at it, there's never enough time because time is our most precious asset. So when you got to that point in 2017 and you realize you're like, I just don't have enough time, or like, hey, I'm taking time away from my family, or I'm too stressed out, I'm not getting sleep, whatever it was, how did you go about working on the business? Like, did that kind of come from like you and Bob, like putting your heads together? This is what we need. Did you kind of take charge? You're like, hey, I've been the boots on the ground. This is how we build it. This is how we scale it. Like, how did that happen?
So unlike the two of you guys, I was fortunate that I had a foundation to build off of. And so I don't take that for granted for a day. And, Bob and I worked together on it. I mean, he sort of acted as the chairman, my mentor, and would give me guidance, a lot of input. But a lot of the stuff was, me talking to my friends in the business community, and bouncing things off of people, and just kind of using intuition and instincts, and, trying out some things and seeing what works and doesn't, not working, reading a lot, watching things on TV, trying to get a feel for how this all gets done. I didn't know this isn't where I thought I would be. It just sort of happened. And then when I got into it, I was like, oh, wow, this is pretty cool. And I think I can make something out of all this. But at the end of the day, all that kind of grit and grind that I brought to the table, I was lucky. Again, I can't stress, I was lucky. I had a foundation. I had a mentor. I had a guy who believed in me and knew what he was doing, and brilliant guy. And he believed in me, and he let me do my thing while supporting me and while providing a lot of input and doing a lot of stuff himself. I mean, by no stretch of the imagination was he sitting in Florida somewhere and I was doing all the work. I mean, he was grinding away too.
He was right there.
So yeah, exactly.
That's awesome, man. Yeah. I mean, it's not an easy thing to do, and we've both been through it. So like, Sean's business, I feel like, is a little bit more office centric, being in insurance. Like, you're getting stuff done like in an office. Whereas like my business is more boots on the ground. Like, you meet an investor client, they're like, hey, I got 15 rentals and I want you to list them, and I want you to like run the tenants through. And it's like, yo, you have any idea how much legwork that is? Like, in person, the appointments, being stood up, the applications, charging people, then the leases, and that's not even, they haven't even moved in yet, So that property management is like insanely people heavy.
So meanwhile, while we're building Direct Mortgage Loan Company, we're also building and operating Jared Pontz Properties, which is the property management side of the. And one of the things
idea was that? I imagine a room and you coming into Bob's. Say, Bob,
you're like, Bob, we're not busy enough.
I got this great idea. All our extra time, we're gonna do property management.
Let's do this.
How'd that go down?
Yeah. So property management was there. It was like, a couple hundred units. Bob owned a bunch of stuff, and then managed some smaller properties for other people in the community. And, I wanted to develop. I wanted to own real estate. I wanted to build long-term wealth. And he was like, go do it. And so I went out, I don't know, we've developed a couple hundred units, or 250, 300 units, whatever the number is. I don't even know, to be honest with you. Bunch of apartment buildings, some small mixed use, multifamily. And then Direct sort of was blossoming. They're kind of going parallel paths, and Direct went like this. And I decided to slow this down at the same time, because I needed my time more on the finance side, on direct mortgage. But we didn't lose focus, and we rebranded, and we've got great people on the property management side. And I'm involved on a, maybe not every day, all day long, but certainly having weekly meetings with rental teams and collections, and strategy meetings and all that sort of stuff. And it's a nice piece to the business. It's I don't know if it's a I don't know if it's the most fun business in the world to be in, but it's where we are. It sort of was there. We embraced it, and it to your point, it's hard work. That there's tenant relations. There's a lot of paperwork. It's all on spec. You don't get paid until you close the deal. And so it can be a grind, but sort of fits in with who we are. And, it is what it is. And I think we're pretty happy with sort of the combination of those two businesses running in parallel.
How did COVID affect the property management side? Was it, more chasing to get people to pay and all of that, or was it more steady as she goes?
At first it was pretty scary.
Yeah.
Everything was scary.
Yeah.
I remember sitting in my house thinking I was going to be filing for bankruptcy. It was like, everything's going to fall apart. This is going to be crazy.
Sky's falling.
And, sky's falling, whatever. And none of that happened. It wasn't even close to any of that happening. But it was just all the thoughts were going through all of our minds. Everybody. I'm just one small piece of you guys had the same thoughts going through your minds.
Yeah, absolutely.
To answer your question, it took some time to sort of figure out the processes and figure out how to make things work. But I've got really great people on the property management side of the business, and really great people in the accounting department, really great people in direct mortgage, and everybody sort of stepped up and said, well, we'll figure out what we got to do. And we all started figuring out what the Zoom thing was and what Google Meets were and how does this work, and let's get together. And we were, just like everybody else, who can get rotations in and out of the office, and how does the paperwork, how does paperwork on the property management side work? How does paperwork on the mortgage side work? How do we get the bills paid? How do we get checks on? All this sort of stuff, and it all came together amazingly quickly, because I think as most people out there who are in business realize, is like it's feast or famine. Like, we had no choice. You had to figure it out. You had to figure it out really. Do or die. You had to figure it out. You had to figure it out really quickly, and you did. You had no other option.
Yeah, no, that's great. One thing on your website that I picked up on, because I do some research, as I've told you before.
Yep.
It's usually,
Craigslist,
Google, LinkedIn, all the crazy stuff.
Right. What'd you find? Tell us.
So one thing I saw on your website I thought was cool is that your philosophy for direct mortgage loan company is that you're a relationship lender. And I'm fine sharing this with the audience. So we work together. So we do flips. Our development group has worked with you guys on countless occasions. You guys are unbelievable. It's part of the reason why we're chatting today. And I wanted you to share some more about your company. But Sean and I also built our businesses the same way, in that, we've never really looked at things transactionally. We've always looked at things that's more about getting to know people, treating them right, customer service, follow through, introducing people to other people, providing opportunity, like whatever it is, building a relationship through business. Because if you build that relationship and you cultivate it over time, you build a lot of trust. And then if you have a lot of trust, like you said, they're not going to put you and two other people on a spreadsheet and go, who should I go with this month? They're going to be like, no, like here's my avenue for private lending when I have this need, and it's Jared and direct mortgage. So talk a little bit about why you guys, your philosophy is more like relationship based. It's like similar to us.
So relationship based is different to me, I think, than it is to a lot of other people out there. Because everybody says they're relationship based. Doesn't matter if they're a plumber, a banker, a restaurant. Everybody's website, everybody's motto: the relationship. This relationship. I'm not the guy who's interested in going to happy hour. I'm not going to grab a beer with you. I don't really want to waste our time grabbing lunch. I'll do it here and there in certain situations, but I'm not spending time in the morning with coffee. I don't want to go on vacation with your family. I want to use all that time that I'm saving, not doing all of those things, busting my butt to get deals closed for people, and repeating that over and over and over again, so that when you guys reach out to me, or anybody reaches out to me, or anyone on my team, we can respond like that to them. And so I'm not at someone's lunch waiting an hour to get finished my Caesar salad to then respond to somebody who needs to close a deal. I want to be at my computer or on the road by my phone and be able to repeat. And so that's the relationship that I provide, that I think is different than most other people who sell relationship. And that I stress that to my team. I've said this before. You may have heard this before. Communicate.
Yeah.
Keep it easy for everybody and be available. Don't waste your time on, and it's not a waste. I get there's value in all of those other things, depending on the business somebody is in. But for me, I built my business on being, on not wasting my time, the way I see it anyway, on those ancillary kind of, meal type things where people are, So I get invited to a lot of events, a lot of happy hours. I say no. Basketball games. You want to come to my box? You want to do this? You want to do that? No, thank you. I really appreciate the offer. It's really generous of you.
Yeah.
But I can't fit it in. I'm sorry.
Well, I think it's building relationships. You can do it in a couple different ways.
Yeah.
You can be the person that's out there and schmoozing it up. And
Yeah, you're always at the happy hours and the basketball games. You're always having a good time.
Always. Or you can really build relationships by delivering for your clients. And by delivering for your clients, they're going to, number one, use you more. Yep. And they're also going to tell their investor friends, hey, these guys were absolutely wonderful to deal with. I can't recommend them enough. And so I think building relationships, kind of to your point, Jared, isn't like a one-track way of doing business. It's like you can be intentional about having an absolute mindset of delivering every single time, and that breeds new business and repeat business.
That's it, 100%.
Yeah,
and like you said, there's no right or wrong way. Different ways work for different people and different businesses. For me, the way I've done it has worked for me, and I think there's a combination too, like sort of how you were made.
How you're wired.
How you're wired. Like I'm wired to constantly be like making people happy by closing deals and creating energy and figuring out how to make this one work when somebody else couldn't make it work. And that constant, back and forth drives me. And I don't get that sitting in a restaurant somewhere having a happy hour.
Yeah.
So for me, it just naturally works out that way. So
I'm very similar in that way, as I am, when
you are kind of like that.
I am
more so, I should say. I'm a little bit more.
You like to do all the
I like to hang out, like to
stuff.
get coffee, shaking hands, kissing babies.
I am the guy that's in the office and, I am trying to like figure out, like, because we get weird stuff. Can you insure this? Can you do that? And it's like, I don't know. Can I? And my time is best spent is like trying to figure out the best product, the best way to insure a specific thing. And that's what I enjoy, more so than
and the basketball games.
And the basketball game.
All right, so
I go to basketball games too. By the way, I'm just taking my kids with me because that's
exactly.
I don't want to go with my clients. I love my clients, but I want my kids.
Yeah, well, everyone has to have a certain level of balance. So, and it's like, and every single person is different. Some people are like, hey, my balance is that, my social life is my work life. Like there's lots of people who balance it that way. And there's other people that are more like you. They're like, you know what? My social life and my work life are kind of separate. Like I put all my time and energy and strength and like intelligence and everything I got into my business when I'm doing it. But then when I'm allowed to kind of turn that off a little bit, I mean, it's never really off, but if you can kind of like put that in second place and then put your family in first place, and I'm very much like this, like with a lot of like my morning routine with my daughter, I'm very much like that. It's like no one's going to take that time away from me, and my entire schedule and everything I do in my day is based on that. Like that's first place, everything else is second. But as soon as I'm going to where I'm going, having coffee, crushing beers,
right?
When I'm going where I'm going, I'm completely focused on that. So, I'm trying not to let my family stuff interfere with the fact that I'm spending face-to-face time with clients and building rapport and introducing them to other people. I've always been a good connector. That's part of my value in the relationship-based model. I'm very good at seeing this person, I think, would find value in this person. So I'll constantly connect people. I'm like, I think you should talk to this person because of this reason, and then vice versa. And then even putting people together, which again, if connecting is your thing, a lot of that is done in person. And it actually brings me to my next point. Another thing I thought on your website was awesome is that you talk about feet on the street. And, so you have a team of 8 people. That's what I saw. What do you love about managing and leading people? So you were doing everything yourself, not that long ago. Then you sat down, you got together with Bob, you put the right people in place, you got Salesforce, you're staying organized, you're staying lean, efficient. Like, what do you love about leading the charge now? Because you got a group of people that are looking to you every day.
So we actually have, not that this is that important, but we have about 22 full-time employees right now. And I think there's a couple of people on direct mortgage that aren't actually on the website for reasons,
Sure.
they just whatever reasons.
Yep.
So I think direct has about 10 people focusing just on direct mortgage,
Wow.
including myself. So, and it started out as basically 2 people. So, it's not like we grew it to 100 employees or anything.
Yeah, but that's super impressive, man.
It's so, the people are what make, the vision is the vision. The business is the business, but we've hired really good people. And those people have sort of allowed us to kind of follow through with the vision and grow the company, find new business, be innovative as much as we can, and just sort of do our thing.
Really cool.
It makes me, when I hear feet on the street, it makes me think like you having the you've done all the deals, the people that are in the right spots.
Almost like you have a pulse. Like you got a pulse on what's going on.
Yeah, so I didn't really answer you on feet on the street. So feet on the street, the idea behind that is we're out there. We're literally pounding the pavement.
Yep.
We're not showing up in a fancy BMW or a Porsche. We're not showing up with our loafers and a suit and a tie. We're climbing the ladders. We're getting in the job sites. We're getting on the roofs if we have to, although trying to limit that as much as I can if we can. But we're out there. We're block to block. We know it. I used to do this all myself. Like I've said, I'm a little bit less out there than I used to be, but I still try to get out there and drive the neighborhoods and get out to some draw inspections and that sort of thing. But that's real. Feet on the street just means we're not in an office. We're out there. Take your computers, guys, put it in your car, hook it up to your phones and do a little work in between draw inspections. But let's get out there and, sort of be part of the process, not pretend like, we're experts from an office somewhere.
Yeah. No, some of the things that I also saw because we ask a couple questions before we interview people is that, some of the things that you love about business that you mentioned were like kind of like the energy that's created, which you've already kind of gone over, like the everyday challenges, like challenges obviously like motivate you, solving problems, watching people grow. So now that you are leading the charge of 2 really nice sized companies, super impressive, like what gets you excited? You wake up, you're doing stuff with your family in the morning. What gets you juiced up every day to go out and make it better? Like, it sounds like you have a lot of focus now on the direct mortgage piece. Not that you don't on the other company, but like, it sounds like you're really focused on that. Like, how do I grow this to a way? I don't want it to be like 10 times as large as we are, but I want it to be larger. I want it to be more efficient. I want to meet more people who need our services. They're just like the people we already work with. So what gets you out of bed with your business?
Well, there's a few things. I mean, I don't think there's no straight line to answer that. I think that I love working with my team. I love the people at the organization. I love being able to, go sit with my property management folks and brainstorm and work on challenges, and then go to, the mortgage team and go kind of bounce around. And I never quite know what's going to happen and what's coming up. And I like the interaction and the relationships with those people. And I think that sort of knowing that the business is creating a livelihood for all those people, creating balance for people, creating a foundation for people's lives, all of that sort of stuff. Certainly, that fear of failure drives me and gets me going every single day. Failure for myself, but also failure that I would let them down in some way and want to be able to keep the company to support them and all that sort of stuff. So I think that's number one above all. My wife, this is not the first time I've ever said that. My wife's heard me say that, like the fear of failure is a driving force in my life for good or for bad. Aside from that, I really enjoy seeing on the mortgage side, I really enjoy seeing our clients succeed. Bob Elfant said to me very, very early on in my career, and it's sort of been a theme between us forever. We are only successful if our clients are successful. If our clients are making money, we'll make money. But if we're the only ones making money, it's not good for business.
Yep.
everybody's got to be doing good. And so it's really, really fun, for lack of a better term, rewarding to see a client have a successful deal, make some money. That's what they're doing it for mostly. And so that's really great. And I also get a rush out of the deal, separate and aside from that.
Yeah.
I get a rush close, seeing a loan close, getting that email that says loan close through the pipeline. Puts a smile on my face. Seeing my monthly reports puts a smile on my face. I mean, sort of that piece of it certainly is exciting. And then I think probably, if I was to say one other thing, is to see the growth of the people within my company. They know who they are, but to see people sort of, one of the mentalities of my hiring practices, and I think you guys my guesses would have the exact same experiences as small business owners. I don't look for specialists when I hire. I sort of look for smart people. I don't care. I actually don't want them to know anything. Yep. Like a blank slate.
Yeah.
I'll teach them everything they didn't know. I just want someone that's going to be loyal, someone that's going to be hardworking, someone that's smart. The rest of it we'll figure out. Give me 12 months with them. Is sort of the mentality. And we've got, I think 3, maybe 4 people on our current 22-person team started out as a receptionist and have grown throughout the company. And watching those people grow is as rewarding a thing as I can imagine. So that's probably awesome. Hopefully I didn't over talk myself on that, but those are some answers to your question.
I always say that sometimes it's a detriment. You get a person that is established or, the X amount of years of prior experience doing this or that. Yep. And it's just a lot of times they're just bringing what they know that's can be applicable, but sometimes a lot of
hard to retrain sometimes.
Yeah.
No, I agree.
Yeah, definitely.
All right, last one we got for you, man. We're big quote guys. We love quotes. Most people do. Is there a quote or any quotes that you really enjoy, live by, that you remember?
So I am not a huge quote guy. I don't specifically quote things in that way, but there are a few things that I say over and over and over again.
Communicate.
Yeah.
Yeah, right. One of the things that people hear me say, one of the things people hear me say all the time is what I said a few minutes ago about, don't waste your time. I'm not the guy that's going to waste the time grabbing a beer with you. If you want to be my friend, I'm not the right lender for you. Yep. If you want good service, you want, the speed, you want, all of that we've talked about, I'm right here and I can get you all that. And I quote that to my team over and over and over again. And I say that when I'm on phone calls with people. It's not a quote, but it's the same theme of something philosophy. I will say.
Yeah.
And one of the other things I say a lot is, back to the sort of, you can't put it on an Excel spreadsheet. Like I believe that so strongly. Mm-hmm. I like to say that we do a lot of little things that add up to make a really, really big difference. And those little things cannot be viewed on the Excel spreadsheet that I was speaking about. And if we're not doing those little things, we're just another lender. And there's lots of lenders, like we said, doing, saying we're fast, saying, our rates less, our fees less, our this is, all the selling points. And I can say all those too, and most of them are true, and all of them would be true. But it's almost the little things that you don't know until you know. Yeah. You know what I mean?
Yeah. No.
Or they've experienced, or that person has experienced with another lender where it was like, oh man, this has been a total nightmare. They come to you and say, oh my God, Jared, this was like a breeze. You did this, you did this. Sometimes you almost need that proof of them to like go through it.
Yep.
And experience that so they know and they know your value.
Yep. So good.
Yeah, we all see that. A lot of clients are people that you talk to. Yep. They went with a cheaper alternative, and then they come back to you for one reason or another. One of the things we kind of coach our loan officers on all the time is sort of, you got to listen to what the client's saying, what the prospect's saying, hear what their complaints are or what their pain points are in other situations, and then tell them how we can fix that pain point. We don't always have to sell them on our advantages or what we do best. Let's sell them on what their pain point is and how we can help them with their pain point. All the rest will fall into place. And every sales pitch and sort of every interaction with a client or a prospect is different. So you have to be ready and nimble. But that's certainly, to your point, is really a good way of going about it, and it's the way to be successful, I think.
Totally.
That's great. Well, we're going to close it out with that one, folks. So thank you for tuning in again to another episode of Bricks and Risk. See you soon. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all BNR episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.